to get to $1 million of Bitcoin, the only way you're going to get to $1 million of Bitcoin is if you get, several $100 billion of new inflows to buy, right? If you do that, you are going to get to $1 million a coin, but you need to get these big inflows. These big inflows will not happen without the ETF. And it's just that simple. So the wall of money that can and will probably come into this asset is 10x is still not even going to move the needle. I mean, it could get 10x as big. For $1 trillion to come into Bitcoin is not crazy. 10 years from now, you're going to be somewhere between 500,000 and 3 million. And now you're like, oh, wait a second. So you're telling me it's absolutely going to get to 500,000. It's like, yeah, that's kind of what the power law says. The very low end of the range is 500,000.
Fred Krueger identifies a revolutionary change in the course of Bitcoin's development and emphasizes the significance of liquidity models in determining its destiny. He separates the development of Bitcoin into two stages, before and after its financial integration reaches maturity. According to Krueger, conventional finance has frequently misunderstood Bitcoin and has treated it similarly to other erratic cryptocurrencies like Ethereum and Solana. He contends, however, that Bitcoin functions according to basically separate dynamics, especially when liquidity models are tuned to lower volatility and enhance market accessibility. According to Krueger, substantial improvements in liquidity and integration with conventional financial systems are essential if Bitcoin is to reach revolutionary milestones, such as stabilizing as a global reserve asset. Closing these gaps is the first step toward institutional and broad adoption. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Now, let's get back and hear what Fred Krueger has to say.
The finance people didn't understand what Bitcoin was. And they just viewed this as like, well, okay, we got this ETF. We'll do Bitcoin and we'll do Ethereum next, we'll do Solana next, it's like,
but that didn't go very well.
There's one new ETF every day in general, right?
Yeah.
So I think the ETF guys underestimated how big of an opportunity this was for this year, but also just like how big it's going to be for the next 5 years, right? Completely underestimated it. Yeah. So that's kind of where I stand on this. I think both parties underestimated. I think the pure crypto people underestimated how big it was, and the finance guys as well. I just feel like to get to the next phase, what we need, which is also to get to the next phase in price, right? Like to get to $1 million of Bitcoin. The only way you're going to get to $1 million of Bitcoin is if you get several $100 billion of new inflows to buy. Right. If you do that, you are going to get to $1 million a coin, but you need to get these big inflows. These big inflows will not happen without the ETF. And it's just that simple. So, and that's why I think, that's sort of the ETF's the higher order bit, right? In right now, everything else is interesting. It's, but it's not the critical, it's not what's going to move the needle at this point. It's going to be the ETF, I think. And I don't think we've seen anything yet, so, everybody was saying that the ETF would be like a short surge for the first 2 months, right? And then it flattens, right? And they all had modeled it that. Why? Because every single other ETF did that. Right? They all kind of like start, new idea. Okay, we got for first 2 months, we get a big ramp, and then sort of go down. Well, in the last month and a half, we've had the same. We went from roughly 20 billion to we did from 0 to 15 in the first 2 months of this ETF. Then we slowed down in March, April, and then in November, right? Early November, we picked right back up, and now we're on this like complete hockey stick trajectory for inflows, right? Nobody predicted that pattern, right? And so I was saying to Eric, I said, like, you guys did not predict it. And, Standard Chartered had actually made this crazy number. They said we're going to have $50 billion of inflows. And, we've already got over 30. So, like, we'll probably end up at 40, this year. So they were almost correct. And that seems such a crazy number, at the time. But I was like, yeah, I'm kind of more in their camp. And I do think, and they said, well, I said, I got the ETH ETF right. And I go, yeah, you did get that right. That, there was, it's really a hard sell trying to explain anything else other than Bitcoin to an institutional investor. I think. Let's look at the current market cap of Bitcoin, like the 2 trillion, right? Well, okay, that's, you say that's pretty big. That's not a small number, but how much of that is owned by TradFi right now? Well, pretty much the ETF and MicroStrategy. That's it, right?
Yeah.
So the ETFs, it's about you're talking about 1 million coins, right? That's $100 million, right? And then let's say another 500, another 50 billion for MicroStrategy, right? So $150 billion is kind of how much the entire pool that TradFi can own. That's how much their exposure is, And this is a world that is, $150 trillion plus, right?
Yeah.
So their exposure really, net is 1/10 of 1%. 1/10 of 1%. So
Fred Krueger recommends an unusual approach for portfolio allocation, arguing that 70% of an investment portfolio should be allocated to Bitcoin. Compared to more conventional approaches, such as the usual 60/40ths stock and bond split, this advice represents a substantial shift. According to Krueger, conventional financial models are out of date and do not take into consideration the revolutionary potential of Bitcoin. He feels that most investors aren't exposed to Bitcoin enough, even though he stresses the value of having 30 to 40% in cash or other liquid assets as a safety net. According to Krueger, if you don't make a sizable Bitcoin investment now, you can lose out on one of the biggest wealth-building opportunities of our time. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
The wall of money that can and will probably come into this asset is it's 10x is still not even going to move the needle. I mean, it could get 10x as big.
Yeah, it's still
for $1 trillion to come into Bitcoin is not crazy. It is just, we spent $2 trillion on the Biden infrastructure, like Build Back Better or whatever he called it, right? Like, what I'm saying is this is after COVID too. So $1 trillion in today's economy, in today's financial world, $1 trillion coming into Bitcoin, it's not crazy. Well, next year you could be as low as 50,000 or as high as 300,000. That's sort of like so a lot of people say, well, great, that tells me absolutely nothing, right? And there's a law that says that. I mean, that's nothing. And then I would say, well, okay, yeah, that's true. It's not very predictive for next year. But it's actually very predictive for about 10 years from now. Because if the power law tells you very precisely, it says 10 years from now, you're going to be somewhere between 500,000 and 3 million. And now you're like, oh, wait a second. So you're telling me it's absolutely going to get to 500,000. It's like, yeah, that's kind of what the power law says. The very low end of the range is 500,000, right? And the very high end of the range is about 3 million. So now you're like, well, that's definitely telling me something very, very predictive, right? That's something that, if that's right, then, I probably do not want to sell a Bitcoin that, if I'm putting a Bitcoin in my child's retirement account, like and the kid's 7, this is going to, this thing's going to be the kid's going to be pretty good if I give him 1 Bitcoin today, right? Maybe 500,000 will not quite buy half of what it buys today. Who knows, right? But it's not gonna be $500,000 for a cup of coffee either. So in real terms, Bitcoin's going to go up quite a bit in the next 10 years. Bitcoin has a tremendous upside over a 10-year time frame. So I would sort of say, what's the right allocation for Bitcoin? Probably 70% of your portfolio. That's probably the correct number, right? Like mathematically, that's kind of what I would say. 70% of your portfolio should be in Bitcoin. Now, everybody's gonna be like, whoa, Fred, you can't, that's irresponsible. You're supposed to be 60-40 stocks. I would say, well, that's just a convention, right? That's kind of like, this current, so sort of like, the church of finance has dictated that that's a reasonable number. But I don't think it is. I think most people would be wise to put the majority of their funds in Bitcoin right now. And, I would say keep 30% around, somewhere like 30 to 40% in either cash or liquid something, just for a rainy day, like in
For
case
sure.
in case you need to wait a couple years. But look, nobody's ever lost Bitcoin over a 4-year period. If you've held 4 years, you've always made money. And like you want to be with the fastest horse. So I think everybody's underinvested, completely underinvested. And I would say most people should be heavily into Bitcoin. It's just such a big jump from where they are currently positioned that unfortunately 99% of them will completely miss it.
Fred Krueger gives us a compelling analysis of Bitcoin's long-term prospects, highlighting its revolutionary potential over the ensuing 10 years. Although short-term Bitcoin price projections can appear erratic from as low as $50,000 to as high as $300,000, Krueger emphasizes the clarity that arises when considering a longer time frame. He contends that Bitcoin is expected to rise between $500,000 and $3 million over the course of the next 10 years, providing a substantial opportunity for long-term investors based on ideas such as the power law. Krueger suggests a 70% allocation to Bitcoin for investors looking to optimize future returns, challenging conventional financial practices like the 60/40 portfolio split. He emphasizes that most people are incredibly underexposed to Bitcoin and run the risk of missing out on one of the biggest wealth-building possibilities of our time, despite the fact that this proposal may appear bold. As a precaution, he suggests maintaining 30 to 40% of Bitcoin in cash or liquid assets. He points out that historically, no one who has held Bitcoin for 4 years has lost money. Krueger rejects the idea that price fluctuations are being less affected by Bitcoin's halving cycles, citing the increasing power of institutional firms like MicroStrategy and BlackRock, whose significant acquisitions are changing the dynamics of the market. Although he accepts that bull and bear markets are inevitable, he thinks the overall trend is still upward due to growing usage and a maturing market. Don't forget to like this video, subscribe to the channel, and turn on notifications to stay updated on the latest discussions in the cryptocurrency space. Share your thoughts in the comments below. Thank you for watching, and we'll see you in the next video.